Okay, today is the 11th of March. You can see the date there on the screen, and I thought it would be a good idea just to take a look at my two share accounts, my share portfolio as it were. So I've got two accounts. I've made a video or videos about this before. I've one with Davies, who are obviously in the news now for different reasons, and I've one with the Gyro. So in this video I'm going to look at the type of performance of the various shares that I have, and I'm going to look at the return and so on. It might be useful for you, and it may give you some further interest and information in relation to investing in shares and so on. So if I head over to the Gyro, this is the Gyro account here, and you can see on the screen there's quite a lot of information. Now I'm going to have to doctor this to a certain extent because I'm not going to expose or disclose precisely my own holdings and so on, but I will be able to show you the returns. As you can see, the return here on the right hand side, the percentage return, that is something I'm going to have to take screenshots, and I'll show you the returns then for each of the shares as we scroll down along. So you'll see what the shares are, you'll see what the returns are for each share in percentage terms, but you won't see the nominal, because obviously the nominal I need to keep to myself for obvious reasons. The other account then that I have is the Davy account. I'll have to log into the Davy account, and we go down here then, and we are looking at the actual return or gain or loss is over here on the right hand side, as you can see. So the percentage gain loss all the way down here, that's for each share, and the shares then are here on the left hand side, as you can see. So I'll take screenshots, we'll have a look at them, and you'll see the returns that I've got over the period of time in question, and I'll discuss it in further then. Okay, you can see the Davy account there on the screen. I've obviously redacted and blanked out some of it because there's no need for me to disclose how many shares or what cost and what market value they have now and so on. The important thing, I think, is the gain or loss and over what time span, over what time range. I opened this account, Davy, in July of 2020, which is obviously only about 9 months ago at this stage, because today is the 14th of March, and in that very short period of time you'll see there the total gain or loss over the portfolio of shares is 38.83%. And if you take a closer look then at the shares themselves, were they risky shares, were they sort of very speculative high risk shares that just came good? I don't believe so, because I have a number of banks there. For example, I have Barclays Bank, as you'll see there, which has shown a gain of 67% and a yield of 0.57. The yield obviously relates to the dividend return. I have BP, which is a very, very solid UK or international industrial company. I have Barclays Bank, as I say. I have HSBC Bank, and you'll see it's returned 38%. You'll see BP has returned 48% of an increase in the value of the share, or the share price rather. You'll see Lloyds Bank there, one I'm very, very sweet on, and that has returned now, or has increased in value by 21%. I also have some smaller ones there. I have Vodafone, obviously, as you can see, that's up by 19%, but you'll see the yield with Vodafone, for example, is 6.23, and the yield for some of the others there, for example, GlaxoSmithKline is 6.33. In fact, GlaxoSmithKline and one other share there, Providence Resources, which was a bit speculative on my behalf, no doubt about that. I knew what I was doing there, and I've only a small holding in that. And as you can see there, I bought the share at 6 pence, or the market price now is 6 pence. I don't even know what I paid for it. But these shares in UK companies, broadly UK companies, very, very solid, well established, long established UK companies, have shown in a 9-month period a 38% return in appreciation of the share price. That's not the true return, because the true return you'd have to factor in the yield as well. Yield obviously is the dividends that I'm receiving, so I would be getting dividends from the likes of Barclays, BP, GlaxoSmithKline, HSBC, Lloyds, and so on. So Vodafone as well, 6% of the yield. But the gain or loss in terms of the share appreciation, the price appreciation, the increase in value of the share, as you can see over the basket of shares, is 38.83%, which is very, very respectable. And if that could be repeated over a number of years, then you wouldn't be too long in doubling your money. Now, I have another share account, and that's with the Gyro, and I'll have to pull that one up there now. Okay, so here we're taking a look at the Gyro performance, and again you'll see on the screen there the increase in share price on the right hand side, over here on the right hand side. So you can see 19% of an increase in Alibaba, 60% Alphabet, 70% Amazon, and so on. Now there's some Turkish there as well, no doubt about that. You'll see there's a 94% drop in the price of Arista, and Arista actually is one of the few Irish companies that have it in this particular basket. Arista has had a big row there, or difficulties and disputes with the board and all sorts of things. Arista, I think, used to own Cuisine de France and so on, and I had a sort of a soft spot for them as a consequence of that, because when I was back retailing years ago, I used and sold Cuisine de France products, and they were very popular at the time. That's the time of the breakfast roll man and so on. We had a deli in the petrol station there in Enfield. So I had a kind of a soft spot for Cuisine de France, and that's why I bought Arista. But as you can see, that share price has definitely tanked. You'll see I've got CNC there. That's non-tradable because they've come off the stock exchange, off the quoted exchange. I'm looking to get my value out of that, because obviously I actually have a 31 or 32% increase there, or profit rather, in CNC. Then I've got Cement Roadstone Holdings, as you can see, 25.87% of an increase. The Lata Hotel Group obviously is down 27%, and it's been very badly hit by the pandemic, because obviously the hotel game has been significantly impacted. But that's the swings and the roundabouts. There's an interesting one there now, and I want to draw your attention to it. Actually, FBD Holdings there, you'll see it's down 30%, 29.76% as well. Obviously, that would be a factor, or that would be as a consequence, or partially as a consequence of the loss in the High Court against the publicans, who brought the case against FBD in the High Court to recover losses on foot of their insurance policies for the losses arising from having to close with the COVID-19 pandemic. And the publicans indeed won their High Court action. So that's had a knock-on effect on FBD share price. As you can see, it's down 29 or 30% there. There's an interesting one there, Draper, and I can't even remember, quite frankly, why I bought that, but you'll see it's up 118%. So that's, actually just double my money on that. Kerry Group have up a little bit there. They're beginning to recover. You'll see Kingspan Group. Kingspan, as you can see, are up 75.26%. There's an increase in share price. Lloyds Bank, I'm in Lloyds Bank here as well. I have a shareholding, you'll recall, in Lloyds Bank in the other account that I have, the Davy one, and this one is up 14%. And then I've got Ryanair, and you can see there Ryanair is up 28.9 or 63%. Notwithstanding the fact that Ryanair are essentially grounded, all the flights, all the aircraft are grounded, and notwithstanding the fact that the pandemic is having an appalling consequence on them, Ryanair have a huge amount of cash, billions in cash. And the funny thing is that my share holding in Ryanair has increased by 28.63%. This time period here is different from the other account, the Davy account. This one's over about 3 years, but it's still showing a very, very good return over that period. This then is the second page that we're having a look at there. You'll see Siemens AG is up 15%. You'll see Steelcase up 15%, and you'll see Twitter is up 131%. So I've more than doubled my money on Twitter. You'll see losses there as well. You see shares falling in price. But as I make the point regularly, especially in my investment course, I make the point that you don't have to be right all the time. In fact, you don't even have to be right 60 or 70% of the time. If you're right, and if you buy shares which are good shares, which increase in price even 50% of the time, you can actually make a very good return. And the reason for that is, if you take the likes of Twitter there, it's up 131% in value, okay? So I have a 131% increase in value in Twitter, and I've made a nice few bob in Twitter shares. But if I was losing money in any particular holding, if any share, and plenty of shares do turn out badly, then my loss is limited to the amount that I spend. So it's limited to the amount that I invest. So there is a downside, or there's a limit or a floor to the downside. There's a limit or a floor when the share price drops, because all I can do, if I put 3 grand say into a share, or 1,000 or whatever, then that's all I'm going to lose. Whereas if it takes off and goes well, like Snapchat has done for me, or like Twitter, then the sky is the limit, and there's no limit on the increase. So that's why you don't have to be right all the time. That's why you don't have to be right even 70% of the time. You could actually make very good returns on your share investments over by being right only half the time, which is not bad at all. Anyway, I just want to mention as well my course. I have an investment course. It's a course, an online course that deals with investment in property and shares, and you might be interested in it. If you find this video useful, I hope you do. You might give it a thumbs up down below, and you may be interested in subscribing to my YouTube channel if this is the first time that you've come across it. This particular account, the Gyro account, I have it, I think it's about 4 years at this stage, and it's showing a very good return as well, but I can't calculate exactly what the total value, quite frankly, because the way that they compute it, they don't give a running total like Davy, but I do believe that I'm up about 12 to 15% per annum for each of the 4 years or whatever, which is very good. And obviously if you're up, I think it's 9 or 10% every year for 7 years, then you're going to double your money every 7 years, so that's not bad. Anyway, hope you get I hope you like the video, and I hope you give it a thumbs up. Thanks a lot.